Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, tech stocks, they waver amid the Nasdaq 100's worst losing streak in 5 months. Concerns about AI valuations dominate. That as we speak with Thoma about its acquisition of HR software provider Dayforce, what is set to become one of the investment firm's largest ever deals. And Google introduces new consumer gadgets, including smartphones, a watch, and wireless earbuds with AI front and center. But first, we turn our attention to these markets. We have been red throughout most of the trading day, but certain stocks are doing their best to lift us into the green. We're off by only 0.1%, but still that's 3 days of losses for the Nasdaq 100, the longest losing streak since back in April. Nvidia doing its best to pull us higher. So too, in fact, is Palantir, but check out how much Palantir has been down over the course of what had been a 6-day losing streak, eroding $700 billion worth, more than $73 billion worth, of its market valuation. And we have seen question marks over, more broadly, the valuation among so many of these AI winners. But let's get a take on this. What's prompted some of the questioning of the valuations and whether it will hold? Denny Fish is with us, portfolio manager, of course, of the Global Technology and Innovation team over at Janus Henderson Investors. It's a firm with $457 billion in assets under management. It just launched its own artificial intelligence ETF yesterday. We're looking at some of the names, Denny, in that ETF. Tough timing amid the current pressure on some of the companies. What do you make of this questioning?
Yeah, so, importantly, the reason we launched this fund is we believe this is the most profound technology shift that we will see in our lifetimes. So whatever happens over the next couple of months is going to happen, but the direction of travel over the next 20 years, we think is very positive as it relates to AI. And if we just, reflect back over the last 25 years and the cloud, the social and the mobile boom, that was, 20 plus years of value creation. And, we think AI has the potential to be even larger than that.
Right.
And with that, given, your question on valuations, it depends. There are clearly pockets of the market where things are more speculative and very highly valued. So, you talked about Palantir, for example, is a good example of a company that trades at a very elevated multiple. Great company, great fundamentals, extremely high valuation. And then, you can come back to names like Taiwan Semiconductor, or, that trades at a teens earnings multiple, or, Nvidia, that still trades at a reasonable multiple given its earnings growth rate with really powerful secular trends. And you can get more comfortable in areas like that. And so, our whole goal also, just to put a finer point on this, is, AI is going to affect the entire economy. So the purpose of our fund is it's going to be heavy with tech, as you can see, in terms of the top holdings, but also you'll find, names in financial services, consumer, healthcare, industrial, and other areas of the economy as well.
It's about where you think AI is going to enable, enhance, or benefit. So I'm interested by the fact that you've got Eaton in there, Blackstone, we're thinking real estate, we're thinking power. How much has that not been priced into these sorts of companies yet, Denny?
Well, I think if we're looking, at the next, 5 to 10 years, you can make a case for, the companies that, we've populated in the portfolio right out of the gate. And I mean, you mentioned power. It's probably the single biggest constraint to deploying data centers right now at the scale that we need and the density that we need is getting, power available. And then once you can get the power available, then you have to cool the data centers. And there's an entire ecosystem around that that specializes in, in those dynamics. And, clearly we want to participate in that, over the longer term.
What's really interesting is about the application of AI. So yes, it's about the infrastructure that goes in and the power that we talk about, the real estate, but then it's actually what it does for businesses. You talk about financials, you talk about healthcare. What did you make of this MIT research report that everyone seems to be worrying about, the fact that 95% of all pilots fail?
Well, we're in that phase right now. And, I was in the Valley during the dawn of the commercial internet, and there were a lot of failures at that point in time too. And, during that period, we had a boom, we had a bust, and, and then it actually created some of the most powerful companies on the planet today and, laid the foundation for these multi-year trends. And so I think kind of depends what you're doing. There are clear applications out there. Clearly, people are getting value out of things like ChatGPT, deep research, co-pilots being widely deployed. And then you have a lot of experimental stuff that's going on in companies, and it's the nature of the beast that you're generally gonna fail a little bit out of the gate, and you learn from that. The technology gets better. People get sharper in terms of deploying the technology and figuring out how to use it, how to change their behaviors.
Yes.
And then you look back in 3 or 5 years, and you're like, wow, I kind of missed the forest for the trees.
Denny, what's interesting, you referenced the dot-com era. Just recently, Intel was back at a profit in terms of its price versus future profit. Its valuation was akin to the dot-com era. It was so high. What do you make of SoftBank putting in money? I know that's in the latest fund, and also the government.
Yeah, so Intel's an interesting one on the valuation. The reason the multiple's so high is because earnings have absolutely collapsed. Yes. And so, that PE equation, when the E goes a lot lower, the PE goes up a lot. So not necessarily because the market's been enthusiastic about Intel, but rather, the financial performance of the company. And then, I just think, SoftBank investing in Intel, it's a little bit curious, potentially, or particularly given that, they have their ownership in ARM, they're participating in Stargate, they bought Ampere. So it almost feels like a little bit of a hedge just because we're going to be undersupplied with semiconductor content for years, it feels like. And, that and power are very significant constraints. And I think if you just kind of look at the behaviors we've seen so far and some of the assets that SoftBank's selling down, kind of feels like they're selling down some of their traditional holdings that they've had in things like, T-Mobile, for example, yes. And they're redeploying that into AI infrastructure. And then the U.S. government, I just don't know because, there's a reason Taiwan Semiconductor has done as well as they've done. They've had leadership now for a decade. Their competencies are just, much more pronounced than Intel. Intel's been in a hole for a long time. Pat Gelsinger gave it a shot for, almost 5 years. We have a lot of respect for Lip Bhutan. We invested with him at Cadence Design for years, exceptional leader. But, Intel's not going to get fixed overnight, and there's nothing the government can do to change the disparity between Intel's process technology and Taiwan Semiconductor.
Denny Fish of Janus Henderson Investors, fascinating to have you on, and thanks for talking us through the new ETF. What name isn't in that ETF is Apple. Many feel perhaps it's lagging on AI. Some other news coming to us from Apple, as Apple TV Plus price is going to be on the rise, 30% to $13 a month starting August the 21st. Apple is saying its annual price more broadly for streaming services is unchanged. It's commenting on the streaming price hike in an emailed statement. We're off by 0.4%. Coming up, we're going to be talking to Thoma Bravo, managing partner there, Holden Spaht, as the private equity giant agrees to buy HR software firm Dayforce. This is Bloomberg Tech. Thoma Bravo, it's just announced that it's agreed to purchase HR software firm Dayforce, paying $70 a share in cash, valuing Dayforce at $12.3 billion. I'm pleased to say that Bloomberg Brief anchor Danny Berger joins us for a key conversation on the matter.
Caroline, thank you so much. And yes, let's underscore how large this deal is at $12.3 billion. It is the largest deal ever for Thoma Bravo, and certainly one of the biggest this year for this market. I am pleased to say that joining Caroline and us now is Thoma Bravo managing partner Holden Spaht. Holden, thank you so much. And your biggest deal ever at a time when your rivals have kind of been languishing, trying to even get deals done. And when they do, it's kind of in the single-digit billions. So why this size of deal and why this one now?
Yeah, well, thank you so much, first of all, Danny, for having me. It's a very exciting day, a very exciting transaction for Thoma Bravo. And look, we don't think so much about, the size of the deal. We think a lot more about the fundamentals and what we can do with the company. This company, Dayforce, is an incredibly special company. We have followed it. I met the founder, who's still the CEO of the company, before he even merged his company into Ceridian in 2012. And so we've tracked this company for a very long time. It's a very unique company in a very important space. It's got product leadership in a big market. And so we've followed this. This deal has been in the works for a long time with our firm. And it has all the characteristics and attributes that we look for in Thoma Bravo in terms of the quality of the revenue, in terms of the product leadership that it has, in terms of its AI roadmap, great management team. And so we're just really excited to be able to have this opportunity.
Holden, you've been following this company for a while, but a lot of folks have had their eyes on human capital management companies. Just earlier this year, Paychex, for example, acquired Paycor. A lot of public companies getting bought up in human capital management. What are you seeing and what are your peers seeing that public markets are not?
Well, that's an interesting question. So Dayforce really fits our profile very well because because of its revenue quality characteristics. So, just to go back for the history for a minute, because it's important to realize how unique this company is. When David Ossip founded this company, he coded an original product, and his thesis was, core HR systems and then payroll systems and workforce management systems were all separate systems, separate databases, separate architecture. And David came with a very innovative thought as why shouldn't all that exist in one database, in one system? It provides a lot more customer value, one basically end-to-end unified platform in the employee lifecycle. So he came in and built a product that does all of that, everything from recruiting, performance management to if I'm an hourly worker, I clock in and I know in real time how much money I've earned. And if I need to get paid, I can get paid immediately. They do the tax withholding for you. So it's a really unique, that value proposition that he built the company on is still unique in this big growing market today. And so, look, and this company has been probably in the 7th or 8th inning of a services to software transformation.
Yeah.
And so what we're really looking to do is just accelerate what they're already doing as a public company in a private context. And just to answer maybe the last part of your question, this company is having a historic year, right? So a couple weeks ago, they announced their earnings. They have 40% year-over-year bookings growth for the first half of the year. Recurring revenue is re-accelerating, which is kind of unusual in enterprise software right now. And the market kind of yawned. And we think there's a big disconnect and a big opportunity to basically continue on the path that the company's on, but accelerating it in a private context.
To be fair, analysts hadn't yawned. There's only one sell rating, and they'd liked the earnings in many ways because, as you mentioned, David, who set up this business 30 years ago, has been able to take on the new iteration that is generative AI. And I'm really interested, therefore, Holden, as to how much generative AI can add value at this moment. Is that already baked in? Because we're all questioning valuations of generative AI-related companies right now.
Yeah. So generative AI is a huge part of our investment thesis here, as it is for most of our software companies. But we think, just taking a step back in this human capital management space, every company in the world right now is thinking about how to maybe reorganize themselves, how to infuse AI into their organization, maybe how to change their organizational structure and hierarchies to account for AI. What kind of skills are needed and how much do they need to pay for those skills? These are all people problems. And so we think this space of general human capital management is a great opportunity for AI for those companies that have data, they know how to protect the data, that have customer relationships. And so we think it's a huge opportunity. They have a really ambitious AI roadmap. They're already selling some AI SKUs today, but there's a really ambitious roadmap for next year to roll out a bunch of AI agents. And we think we can just help them accelerate that path to basically an agentic AI human capital management software company.
Holden, just on that point, we would love to get your views on an MIT-related study that seems to have gotten this market maybe a little bit worked up. The study that 95% of companies who took on generative AI pilots, 95% of them saw a zero return on investment. Given your work with these types of companies and incorporating generative AI, 95%, does that number seem right to you?
Look, Well, I would tell you, we focus, that's really interesting, by the way, because I do think there has been an issue with people really trying to measure ROI on their projects. Everybody's using it. Everybody knows it's the next big thing. But is ROI really being, measured in it? And are people giving customers things that they may not want? And so we've taken a very measured approach. We think there's a real benefit to these SaaS companies that have incumbency and they have data advantages. But I think at that enterprise level, look, obviously there's been a lot of, the easy ones have been the call center and product development. Those have been the two biggest areas for AI, I'd say cases that have generated really positive ROI. But I think there's also a lot of sprawl too. There's a lot of tools being sold that maybe aren't being totally utilized. You see that in some of these earnings announcements. So I think it's just important to be careful to ensure that there's connectivity between the customer's roadmap and your roadmap. So we think it's really important, but we are taking a little bit more measured approach, because if you sell something to a customer that they're not using or don't need, that creates problems down the road.
It's been great having you both join, in particular, Danny Berger. Thank you for helping us bring the conversation. Thoma Bravo, managing partner, Holden Spaht, fascinating, particularly on that MIT report. Coming up, the CEO of Databricks joins us to discuss the company's latest funding round. A whopping valuation of over $100 billion. This is Bloomberg Tech. Databricks, it's raising new funding at a valuation that tops $100 billion. The Series K investment marks, get this, more than 60% increase in the data analytics software provider's value since it last raised money in December. Databricks CEO Ali Ghodsi joins us now. Extraordinary growth, but extraordinary growth in applications of AI that you're currently building and helping with businesses translate their data. How do you accelerate that?
Yeah, that's why we did this investment round. We were looking at the product portfolio, and there's two areas we really wanted to invest in, and that's why we did the fundraise. One is lake-based, so agents and AI is also going to revolutionize databases. I know we're thinking about how it's affecting society, but the database market is a $105 billion TAM, and what we saw in the data is that 80% of the databases are now being created not by humans, but by AI agents. So that's why we want to invest it in our database product called Lakebase. And the other side is a product we have called Agentbricks, where we're really investing it in how do we actually help automate tasks with agents at enterprises with high quality and high fidelity without hallucinations. So that's why we're doing this. We're investing it in those two areas that we think have huge potential.
Ali, can you kind of translate for our audience how different the technology is needed to cater for an AI agent rather than a human?
Yeah, so the agents move much, much, much faster. We think we're slower. We take our time. These things just go all the time, right? There's no stopping, and they can do it in parallel. So there's many, many of them doing it. So what you need to make sure, for instance, if you're providing infrastructure for them, like a database, you have to make sure that the cost of that is low, because they're going to spawn up and try many, many things. It's almost like you can imagine that you have, 100 interns unleashed, running off, trying lots of different things. So you'd like to lower the cost of it. You want to make it super fast, because if they're trying to use a database and the database is slow, now you've slowed down all of the interns. So you don't want to do that. So those are some of the things you have to do differently. Move faster, lower the cost, let them experiment more, because they're going to try lots of stuff and then they're going to pick the best result. That's not how humans operate, because we're more expensive. We take our time, and then we're sort of, measure twice, cut once kind of approach, which is not the case with the agents.
Let's talk about expensive humans, because you've been adding, I think, about 50% by the end of this year, right? Adding 3,000 to your headcount. How expensive are those humans at the moment, Ali, given the talent wars we see?
Yeah, I mean, I thought already that things were very expensive a few years ago, and we pay top of the market. We compete with, say, Google, Meta, and so on. But I would say the last 12 months or 6 months even have been insane. I mean, it just keeps going higher and higher and
200
higher.
million high, Ali? Like, are you having to counteract that?
Yeah, I mean, look, we're seeing insane offers out there. If the talent is really that good, we will pay up. However, there's also the other side of it, which is they're going to work together with their coworkers, and you want to have equity and fairness. If you have two people that have the same background, that are equally good, just because someone started 6 months ago, you don't want to suddenly have them make 1/10 of the person that's sitting right next to them. So if you don't keep that equity in mind, then people get unhappy, they talk, and then they will move around. And that's why we're seeing so much churn in the AI market right now. People are switching jobs, from this company and then back again and so on. So you want to also be a little bit thoughtful about it, but yeah, you have to pay up. Otherwise, that's the price to pay right now.
What about paying up for M&A? Because I know that you've raised funds potentially to do that. What sort of companies?
Yeah, I mean, we're looking at across the board, right? Like this database technology I talked about, right? Lakebase, which is separated compute and storage for Postgres, that's came through an acquisition that we did for $1 billion. So we're continuing to be very, very interested in these, in where there's talent. AI is very interesting because, on the one hand, we hear about these companies that have crazy valuations, right? 100 billion plus.
Like
but
you?
On the other hand, yeah, but on the other hand, there's a lot of startups that started 3 years ago, 2 years ago. And, if the revenue is not there and the business isn't working out, but they have amazing talent and they have great ideas, maybe they didn't just have channel distribution, those are great. And you can actually get them for, I guess in the big scheme of things, you could say cheap. But,
Let's just talk about these so-called crazy valuations, Ali, because I know your phone has been running off the hook in particularly the last few weeks, people wanting to allocate more towards you. Do you think that would happen right here, right now? We suddenly see a slight rectification in valuations in the public markets. Are things cooling down? Are you worried by MIT reports reporting of a lack of impact of AI pilots, for example?
No, I've been pretty vocal about this as well. I'm very bullish on agents being able to do all kinds of tasks, but we're like in the very early innings. And some people are already declaring success as if we were done. We're not. We're at the very beginning. When it comes to agents, for instance, one of the biggest challenges is that, when you unleash these agents, the hundreds of interns that go off, they make errors. And, right out of the box, you might have 30% errors. Would you hire a person that makes 30% of the time completely crazy mistakes? No. So we have to get the quality up. That's what Agentbricks is focused on. How do we iterate and improve the quality? So I do think we have to pace the investments and the expectations on the ROI. What's timeline? If we're thinking that, these agents are just going to work everywhere right now, that's not the case. It's going to take us years to be able to see the impact of AI across the board in organizations, maybe even 5 years. It's still going to be very impactful. It's still something that's worth investing in, but you have to get that timeline right.
Always talking straight to us, Ali Ghodsi. We so appreciate it. Databricks CEO, congrats on the Series K. Coming up, Google bets on AI for its new devices. We'll have the details, what the company's just launched. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We take a look at these markets because it's been a volatile day of trade. More broadly, we could be on track for 3 days of losses on the Nasdaq 100. Worst stretch of losses going back to March of this year. We're currently off by 0.3%. Meta dragging us a little bit lower. Netflix from a points perspective on the downside. On the higher side is the likes of Nvidia. Let's look at a rebound for Palantir as well because it had 6 straight days of losses running into today. We get a little bit of a reprieve, but only 0.1%. More than $70 billion of market cap wiped off of this retail fan favorite as people question that valuation. When you're looking at profit to price, price to profit in the future, well, it's trading at almost 200 times. Looking at Intel on the downside, off by 0.25%, 1.25%. That's as we question what dilution or discount the US government might get after the euphoria that SoftBank and the US are indeed putting in money. And we finish on Google having a rather nice day, up by 0.4%. It comes off of its highs. But all of this is following Google's introduction of new consumer gadgets, including phones, earbuds, smartwatch, all with the company's latest Gemini AI really at the heart of it all. We spoke with Rick Osterloh, he's Google's SVP for Platforms and Devices, about the company's launch event.
Gemini is a huge part of Google's strategy. We've made so much progress with it. We've got the best models around. We have the best AI assistant. We're just so excited about what we've talked about today. And
yeah.
I personally love using the VO video model. You saw a video of my dog talking in the show, which was really fun to put together.
A cute poodle across something.
Yeah, he's a Portuguese water dog who somehow speaks English. But it was really, really fun to put that together. And this is kind of the power of AI now. You can do things for fun, you can be a lot more productive with it, and Gemini is the thing that powers it all for us.
I mean, Steph Curry's doing things with sports. You had Alex Cooper there, Call Her Daddy, doing things with the camera. I'm interested, though, how this sets you apart. What are you offering, do you think, versus the competition? How am I going to be able to use it in a wholly different way than currently I could with a competitive out there?
Yeah, well, I mean, I think AI in general just transforms all of these products. Yeah. On the phone, it's going to make it so much easier to interoperate with your phone. You just talk to the AI and it'll do things for you. You can show your camera to the AI and it'll give you hints about what to do, like if you're trying to do a project at home, like fix some plumbing or fix some shelves, whatever it is, AI can help. And we're really excited about our partnership with Stephen Curry to apply this AI technology to personal coaching. And, you know, I can't think of a better person to work with than him. He has sleep coaches, nutrition coaches, fitness coaches, and he wanted to work with us to bring this kind of capability for personal coaching to everyone. And so that's what that partnership's all about. We're really excited to work with Steph.
And in many ways, like, you were helping oversee the purchase of Fitbit back in the day. It's now in the form factor of a watch that you've got on. Rick, though, what form factors are we yet to see? We've got the pods in your ears, you've got the watch, you've got the phones.
Right.
Where next?
I think there might be a few coming next. Well, we're bringing Gemini to a bunch of surfaces you use every day, but they'll probably be used very differently, like automotive. There'll be Gemini in your car, on your television, in your smart speakers and smart displays. But I think a really exciting thing that'll come in the future is Gemini in glasses. So we're working on smart glasses that'll run Gemini as the main way you interact.
Any for a year that you think that'll be coming out? Is this going to be
it'll be
Brooklyn
coming out
2027?
Sometime next year. Will be pretty exciting to see.
Costello, Google's SVP of Platforms and Devices. Let's talk a little bit more about all of this. Carolina Milanese, she's the president and principal analyst at Creative Strategies. We were in Brooklyn together yesterday.
We were.
I loved reading your report on this. You said, look, Google avoided any risky moves, so we didn't get the glasses in the here and now, but the prowess you see is that Gemini is just full force within these devices.
Absolutely. It's all about AI. It's about really getting consumers to understand the power that AI can bring. And as Rick was saying, it's different things to different people. So what was amazing for me yesterday was see the breadth of people that they were able to reach with all the guests that they had, both from an age demographic, but also from what is the hook that you want. It can be editing, it can be taking the best shot, it can be getting fitter.
And it can be photography. Andre D. Wagner they had over there. They had, of course, sports when it came to Steph Curry, or indeed Lando Norris was there. We also thought about the way in which communities are going to use it for camera and for editing. Is that really that important? When do you think the camera is really going to be the standout feature for so many?
Camera is already the standout feature for so many consumers.
But the Pixels had a better camera than anyone for ages. That's what they kept on reminding us, but people are still buying Apples instead.
It is, but it's about what you can do from an editing perspective now. It's not just about taking the best shot and taking the friction away that there is today in getting to that editing. So being able to tell an AI agent, Gemini or something else, how you want the picture to look like.
And what it really compares and contrasts with is Apple's lacking, right? The fact that we're going to be so easily integrating Gemini AI from a spoken word perspective, and that Siri is just so behind the curve. Do you think they're going to eat any market share there?
I think it's always hard from a high-end perspective to see churn from Apple to anywhere else because consumer have more device than just their phone. And so you're talking about a difficult choice to make. We also still at the very beginning of the AI shift. Consumers are not walking into a store asking for an AI phone. We talked about this for Apple in June. But I do think that time is ticking for Apple, and we need to see something sooner rather than later.
Instead, this almost helps Google show off the Android ecosystem. You might not get a Google Pixel, but you might get a Samsung. And probably through this demonstration, you can see how well integrated that's going to be as well. How do they navigate this sort of frenemy moment?
Yeah, I think it's definitely first about the best of Google on Pixel. And then you started to see Samsung getting closer to that ecosystem and putting aside their aspirations with Bixby and really building on the power of Gemini. So Motorola has been doing the same thing. So it's definitely about the ecosystem, but also feeling that, in my view, Pixel is the answer to Apple within the Android world.
And they got a foldable phone, which in any way goes head-to-head with the Dochi-endorsed Samsung, but Apple has no foldable right now. I thought what was really interesting was when they put them out on the market. Next week we get the phones, but the watches a little bit later. I asked Rick about whether it was a supply chain issue. He said no. Are there any supply chain issues for these companies right now? It gets its chip designed in-house but made by TSMC. How does this whole come together?
I think, to be honest with you, it's a marketing strategy more than a supply issue. It's about getting before Apple and after Apple, right? We know that the expectation is beginning of September usually for Apple. And so getting in with the mass market product before the iPhone is out, and then with something that is more appealing to still a niche market, but very powerful users with the foldable towards holiday season.
I think what really resonated in your note was the confidence that Google had at this event. I mean, it was just celebrity-filled. You felt like you were at a TV event. That was the whole idea and narrative of it. Have they got the right to be this confident right now, do you think?
I think it's empowering for them instead of always focusing on chasing Apple to actually feel confidence in the product that they have, which are, iterative from last year, but solid. And I think that finding the confidence in their branding is very important, and broadening the addressable market that they're aiming for. It's not just tech buyers anymore, it's mass market consumers.
Subway takes, Call Her Daddy. They had a lot for the Gen Z and the younger millennials. Carolina Melanesi, loved having you here, President and Principal Analyst at Creative Strategies. Coming up, Runway CEO Cristobal Valenzuela is joining us to talk about the company's new tools for video and games creation. This is Bloomberg Tech. AI startup Runway, which shook up Hollywood with its AI video generation tools, is entering the world of gaming, announcing today its Runway Game Worlds beta, which takes a step towards real-time game creation. Runway CEO and co-founder Cristobal Valenzuela joins us now. And Cristobal, how changeable or what a complete shift is this for the gaming industry? Because consumers are going to be able to use it, but what does it mean for the actual studios too?
Yeah, it's massive. It's a big change in the same way that AI was a big change for Hollywood as well. And now it's important to understand and recognize the two parts of how AI is affecting games. On the one end, you have the real-time rendering component of it that we're working towards, which basically means you're going to be able to create pixels in a real-time manner. And the other one is the mechanics, right? So how do games manifest itself? What are the interactions that users would have with them, from consumers to pretty much everyone? And so Game Worlds for us is kind of like an exploration and our first product in the mechanics of non-linear stories with AI, creating these worlds in real time and having players experiment with them.
I mean, I think about the first time that we first started bringing you on the show and hearing from how much you were, well, disrupting Hollywood, but Hollywood has now come to embrace you, Amazon using it in their latest works that they're doing and creating, Cristobal. How has the gaming studio reaction been? Has it been bristling or has it been accepting?
It's somehow very similar to what I think Hollywood went through a year and a half ago. I think it's totally new. It takes time, but now I think most of them have started to embrace it and understand it. It's a radical technology. It changes how you do your work, and you need to embrace it. You need to understand it. There's things that work really well. There's some things that don't really work really well. But really, it's about like using it more. And so I would say that games and the gaming world is where I would say Hollywood was a year ago. And now, as models progress, get better, and become more usable, you start seeing most of those companies now starting to adopt it.
I mean, you can see the impact because it's being used in features by big tech companies and big filmmakers, Cristobal. But How are you measuring impact for those that are about to take it on? Look, we're all talking about this MIT study about whether or not 95% of these pilots for generative AI are failing. How do you prove out that your technology adds value?
Yeah, well, you have to make sure it helps users somehow. And look, there's a challenge, and I think the challenge that I think media and Hollywood recognize over time is these are not tools that will make movies for you. And I think that was a big assumption at the time, where like many people thought you just came into Runway, type movie, and you get a movie out. Unfortunately, that's not yet what the technology is doing. It's much more about you being in control and you spending the right time, but also you need to rewire your brain a little bit. You need to retrain the mental models of how this technology can help you. And that takes time. And so how we manage through that change with our companies and customers and users is we help them. Sometimes we go and work alongside them. We have technical artists that you can think about them as like forward deploy engineers that sit together with our companies and users and enterprises and help them understand how Runway can fit in particular parts of their workflow. Your Aleph, for example, is our latest video generation model that allows you to edit video in ways that you just couldn't do before. And it works completely different from anything you've seen before. And so it's not going to work based on what you know. There's an adjustment period. And that adjustment period is critical. For me, it's very similar to perhaps how the cloud was a big change for companies. Like it requires you to redo and reorganize some of your teams to prepare for this.
Talking about reorganizing teams, I mean, Mark Zuckerberg's been busy at that. And we understand that previously he'd perhaps eyed up Runway, wanting to be able to buy that to bring in for the AI prowess. You knocked it back. That's off the table. But how many offers are you getting for Runway? And how are you comforting your employees that you might not jump ship?
Again, I've been working on this for like almost 7-8 years, and I think we're now hitting an interesting inflection point. It's getting too exciting for us to like think about not being independent. Like we want to remain independent. We have the resources we need. We have the best team in the world doing some of the best research in the world. Now is an inflection point in both quality, adoption, penetration. It's a really exciting time to build Runway, and I think there's still a long way to go for us.
First gaming product. We thank you for talking us through GameWells and so much more that you've been doing with the Aleph model and plenty more. Cristobal Venezuela, CEO and co-founder of Runway. Always great to catch up. Now, sticking with AI, DeepSeek, it just unveiled an update to an older model that it says surpasses the seminal R1 on key benchmarks. Now, DeepSeek said in a WeChat post that the new version answers queries much faster and marks the startup's first step towards creating an AI agent. And closer to home in the US, OpenAI CFO Sarah Fryer has just told Bloomberg that the company could take a page out of Amazon's playbook. Following an approach inspired by Amazon, which found success renting out its spare cloud computing capacity, OpenAI could, in the future, sell access to data centers and other physical infrastructure needed for AI. Bloomberg's Shireen Ghaffari was there for that conversation, teasing out those pieces of information, because Sarah Fryer really does have to think about the profitability of this business in the longer term.
That's right, if you think about it. So, I was also recently at a media dinner with Sam Altman when he said we plan to spend trillions on infrastructure in the near future, and that economists might call that crazy, but they are marching on. So as OpenAI starts to put this immense, unprecedented amount of capital right toward data center expansion, they're building expertise in that. And I think the long-term play here as well, how could we in the future potentially market and capitalize on that expertise?
And be able to drive up revenues to be getting better financing for the future of their own infrastructure spend. At the moment, they've been funding that spend by raising money in venture. Any nuance there? She really did talk about how they've been able to sort of raise more than they anticipated.
Yes, they were planning on $10 billion in one piece of their kind of tranched funding round. She said that they have actually gotten to $11 billion because of excess investor interest. And more broadly, they're actually looking beyond just equity financing at this point. They're also, as Fryer told us, interested in debt and debt financing. And they have said that banks and private equity firms have approached them about this.
So interesting as we see how Meta has been financing some of its data center needs, getting into the world of private credit with PIMCO and Blue Owl. What more about the growth of the business when we're just coming off the back of GPT-5 and some of the throws around that, and they had to make some difficult choices, particularly when it came to, well, how nice the chatbot is to people and how they bring back other models and the like?
That's right. So it was definitely a bumpy rollout. I think bumpier than they expected, right? Also at that dinner, Altman, said, we know we messed up on on the emotional attachment. I think they did not realize that people fully had to the older version of the chatbot, and they were all a lot of users were angry that OpenAI initially deprecated the older model. However, I think overall, the bigger picture is that ChatGPT is still the market leader, right, on consumer usage, just on chatbot usage overall, and they still have this voracious demand, as Fryer put it, for the use of their products that requires intensive compute.
And there's voracious demand to fund it, as we were talking about. And actually, eventually, retail want to be owning a piece of this company. More people, democratization. Sam's spoken about eventually the need to IPO. But as a CFO, how is she thinking about that, Sarah Fryer?
I mean, for Sarah Fryer, her job is both to raise these funds, right, for OpenAI, but also be able to allocate that compute for these customers. Oftentimes, they're having to decide in advance which customers are actually going to get the compute power they need to run all the ChatGPT products. So it's a mix of fundraising, of keeping customers happy, keeping consumers happy, and figuring out all the right the financing and money for it.
And then levers to pull. Shireen Ghaffari talking us through what was a fantastic conversation that she had with Sarah Fryer, CFO of OpenAI. Now coming up, SpaceX, another very highly valued private company, tapping into luxury travel as it expands its Starlink services. More on that next. This is Bloomberg Tech. SpaceX has steadily built up its Starlink in-flight Wi-Fi services with carriers like Air France, United, Virgin Atlantic signing up. Now the company, is eyeing a Middle East expansion as it holds discussions with the likes of Dubai-based Emirates. Bloomberg's space reporter, Sana Pashankar, joins us now with the details. How big a coup could this be to get in with Middle Eastern flyers?
Yeah, it would be a really big moment for Starlink. As you mentioned, these are luxury airlines, and a lot of them are stopping points for really long-haul international flights. So it could be, bring in a lot of revenue for Starlink, which is SpaceX's most profitable unit.
Who's it been booting out the way? Which have been the previous Wi-Fi offerers, which I say many would say they've been frustrated with in the past, as Wi-Fi doesn't always feel that great on board?
Yeah, so the legacy operators are Viasat, SES, Intelsat, which was actually SES acquired Intelsat, and also Hughes. And those legacy operators have historically relied on geostationary satellites, which are much further away from Earth, to provide that internet connectivity to airplanes.
And what does the negotiation period look like? How does Elon, or indeed just SpaceX more broadly, and Gwynn over there, win over these carriers? What is it that they have to prove out?
So SpaceX, it's been shown by third parties that Starlink has delivered the fastest Wi-Fi speeds across industry and compared to those legacy operators. And that is in part because their satellites are much closer to Earth. So, the internet has less distance to travel to getting to those planes. But Starlink has a couple of negotiation tactics that they use. They don't really allow airlines to announce that they're using Starlink unless they'll equip on their whole fleet. They also have put in this request that airlines offer it to free for everyone on board, which, some airlines have some airlines have pushed back on because they just want to offer it to their customers in their loyalty program. So, they have a couple of requests that they put in, but it seems like the negotiations are unique for every airline and every operator.
Sana Pashankar bringing us the latest on that part of SpaceX. We appreciate it. Let's get back to the public markets right now, because we're back under pressure. The Nasdaq 100, as you'll see, down now for 3 straight days, 2.5% lower. We've been questioning above the board the frothy valuations. One of them we've really been keeping an eye out is on Palantir. Now, its valuation, its multiple is extraordinary. I mean, trades 200 times future profits. We're down 14% in the last 5 days. In fact, it's been low for 7 straight trading days, the longest sell-off we've seen since March 2023. We'll see how Alex Karp is responding to some of those shorts, finally winning out some money, made about $1.6 billion in the period of loss. Now, that does it for this edition of Bloomberg Tech. Don't forget to check out the podcast. It's Bloomberg Tech.